Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. and Canadian market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed for information throughout the week. So, the jobs report this morning was pretty strong, and that gave the market a little bit of inflection where we were just all starting to price in a Fed rate cut. And now with the data so strong, will they be able to cut? The data doesn't really support that, but we do have other things like PMI starting to flicker. So we'll see how the Fed manages that. That's at the end of the month. We have earnings between now and the Fed meeting, so those will probably be the bigger issues. But on the news of the strong jobs report, gold fell back below 1,400. And that was a pretty big move. Now, on Wednesday's show, we covered off a few charts about if yields reverse. And I want to cover off a few more in the banks, insurance, asset manager space, because the asset managers are starting to move. So with that, and then I want to I'll probably start here on the semis and just show you the semis chart, because the semis are pretty crucial in terms of a big tech picture. So we want to always be aware of where they are. So jumping into, here's our SMH chart, the Semiconductors ETF. And what you can see is we tried to break through this prior high and have now pulled back for the last, all this week, starting to drop down. And you can see the PPO momentum would be rolling over here if this persists at all. Now, we do have a small uptrend here, basically off the May low, up through the bottom of the June lows. And what we want to make sure of here is that if this starts to break down, that's going to kind of confirm that we have a failed top. Now, on the big picture, you can see why this might be more important here. We had a big surge in momentum, then a pullback. Now you retest the high, and if you start to fail here at this lower level, that's kind of the problem we had back in 2018, where it continued to make lower highs in momentum, even though price was up near the prior high. So we want to keep watching for that, and it's not, a 5-alarm bell or anything like that, but it is something to just keep track of if the semis start to lose their momentum. What we see back all the way through the big uptrend here in 2016 and 18 is we never had big swoons. We had little, gentle pullbacks. It was just basically going sideways, which was fine. Here we started to pull back a little bit more. What we want to watch for is if the semis can't get going, could be indicative of more weakness on the tech. So that's an important little area for us. The gold trade has been a pretty good trade as of late. Obviously, we had the big acceleration in June. I think it was basically from May 31 to the end of the month. And one of the things that I want to point out on gold itself is a lot of these gold stocks are starting to turn up. So these are sorted in order of performance, I think, based on the last week or something within gold. But they're starting to turn up. And again, is it a surprise? As an example, let's just go back here, GDX, the gold miners index. So after spiking up here, we're hovering, and again, even if it pulled back to the 50% level and turned back higher, this would still be very much a new bull market. So watching this 2350 level, this is probably a nice place to look for a pullback to come down to, and then you try and take that next wave higher. But I think that the sentiment on gold was pretty much all in right on this breakout here. So this pullback gives us a place to reevaluate which stocks we want to be in. And there's a lot of nice ones to trade in that area. So again, these are sorted based on percentage moves. But here's Gold Ocean Group, and you can just see it's really starting to turn up. Here's directional gold miners. A little bit of a blip, but again, I've just put all the gold stuff together, so all of these triples are probably going to be near the top for reversals. But as we look through the gold sector, I wouldn't give up on it. I'd be watching for a pullback, finding the names you like, and then as they start to base on a 60-minute chart or something like that, I'm just trying to find one with a little bit more price action to it than a 50-cent stock, but I've sorted them on percentage change. So the problem is I've got a lot of these that are really small. So here's the Gabelli Natural Resource Fund, but just taking something like a 60-minute chart, and this is still extended up to the top here. Maybe you get some sort of a pullback into the bottom of this range. Maybe you actually get a little bit more of a dip down into this 550 level. Well, this is the kind of thing you want. You just want it to roll over, and when it starts to turn back up, creating this sort of base, then that's more, that would be a better place to look for an entry, I guess, is what I would suggest. Okay, but the predominance for today's show, I want to talk specifically about the banks and financials, and there's an important reason for this. We've talked about it a few times before, but the financial sector hasn't performed quite as well. Here, we could go do that. Hasn't performed quite as well as the rest of the market. So we're nowhere near our previous highs back in January 2018. We're still probably, I don't know, close to 10% off the highs. But what we're looking for is if the financials can start to outperform again, then that probably would complete our rotation back through this base and out the other side, and the financials would start to perk up. Now, one thing that's important to remember, the financials are looking for the spread between the 2 and the 10. Well, if the Fed drops the interest rate, that should help a little, but it's not going to help a lot, because we still have a very tight spread. And normally what happens is, as the Fed was raising interest rates, that was helping the banks more. So I still want to keep watching the banks, but as you can see, their PPO momentum is above zero and rising. So this is still very bullish. It's trying to make new 2019 highs as we look here just at the broad group of financials. Bouncing off the 50 level is bullish. That's a bull market trait that we like to see. And when you get those sort of bounces, that's, that makes it easier to invest in the sector. So I want to spend some time looking through the bank names and finding strong ones to go with. And now, I think one of the areas of importance is always watching the European banks and making sure that things start to perform there. And we've got a change from Draghi to Christine Lagarde, and it looks like Mark Carney's going to be the head of the IMF. So we have some well-known names that are going to start to roll into those two major positions. And we should be able to, watch those groups. I think they'll have a firm handle. It's not like we're going to get surprised. There was some fear that we might have somebody who was more hawkish, that wasn't going to be as supportive of the European bank system. But Christine Lagarde, I think, is fairly well regarded in terms of being dovish. So we're watching for that. Now, here's MSCI, the specialty finance. This is rolling up to the highs here. Not too sure we're worried about Russia's bank here, but here's Equifax. This is starting to break out to new 52-week highs. Moody's Corporation, this one just keeps surging up and to the right here. So this is a pretty nice chart. Nothing I like the price action on it. It's holding up well. Citigroup. Now, this one I want to take a little bit more time on. Let's just analyze the chart for a little bit here. Going back into 2014, so this is at the end of quantitative easing. As Citigroup got up towards this 75, it had trouble getting into this overbought zone, not overbought, but into the top quartile. And what I like is when the scooter ranking gets up into the really high level here, that tends to give you a lot more institutional rigidity. And the reason for that is because they're looking for outperformance. So when these stocks start to perform better than all of their peers in the large cap space, it helps a lot. What we have now is it is just entering this top quartile. So as it gets up there, I want to keep watching to make sure it doesn't just fail here, because as we've seen with Citigroup, getting up into the top half of the median, so between 50 and 75, is quite prominent, but this is the highest it's been in over a year. This is starting to tell me that there's some interest going on, that the price action is starting to move up relatively strongly. And again, we want to get into this really big uptrend. So if you're looking for a large bank to hold, this is kind of the area that we want to play in. Now, we did have a downtrend in relative strength here, and we can see that we're starting to break that and starting to head to the upside. I'm just going to go grab the chart on a separate screen here, and we can just annotate it up a little bit. But the point I want to make on Citigroup is that this downtrend here starting to break, and that is very bullish. And again, we got this same sort of signal where we get the bullish bounce off the 50, or without going deeply into the oversold, we get the bounce kind of midway and it's starting to return to the top. You'll see that on lots of strong stocks that halfway bounce is a lot better and kind of gives you a better signal. So here's the trend line for Citi on relative strength. So this is compared to the S&P 500. And you can see when it's outperforming the S&P 500, that's pretty strong. And when it's underperforming, that's a problem. Well, here's the good news. We've broken the downtrend in underperformance. And so if we just set the line horizontal and go back to kind of here. So we're going back to about 8 or 9 months ago, just at the September high where this started to break down. We want to see this relative strength break out to new highs, and it wouldn't take much to do that, right? If we got up to here, all of a sudden we'd be into new 52-week highs in relative strength. One of the common scans for institution is 3-month highs in relative strength, 12-month highs in relative strength. So we want to keep working with those ideas and recognize that if we can get above this level here, this is going to kick in some more buying as Citigroup starts to break out. Now, the asset managers and the specialty finance, those are starting to move nicely. With the backdrop that all of these are starting to turn up, I think there's an important play here. And if it's going to start to move, I want to be in early on the move, not late on the move. So there's a lot of things I like about what this Citi chart is showing me. It's giving me most of the bull market signals I want to see. The PPO is now above 0, and that is really bullish. I think one of the things I don't want to see is that this now, 6-month trend line that we've got on on momentum starts to break down. The reason that that's so important to me is one of the things that we commonly see is momentum just barely get above 0 and then roll over. And we kind of had that in here where it got just slightly above 0 and then fall down. And that was coming into the September high. So we're up and we've pulled back a little, and now we're trying to make a higher high on momentum. I fully expect it to do that. If it doesn't do that, that's telling me something totally different. And that would be something that I want to watch closely for, especially on a big major US bank like Citi. So when we take all this and add it together, let's just zoom in on, I want to focus on the right-hand side of the chart here. I'm going to turn on the zoom thumbnail. That gives me that little box over here on the side. And I want to shorten up the chart. And the reason I want to do that now is that gives us the chance to see this additional data. And what we're looking for specifically is when this this PPO line came down and touched here, one of the things I had heard it referred to was a kiss, where it basically touches and takes off, and it's like a park and go, and it just kind of keeps going and runs to the upside. Now, one of the things we want to make sure that doesn't happen is typically at the end of a move. So you'll have this big move that we saw, we have this pullback, and then you get this small move at the end, and then it just barely rises up and it starts to break down. So it's kind of like its last surge. With Citigroup, we haven't had that yet, and it's just such a big bank. I think, on the top 5 banks, you want to be aware of the momentum curve on them. But if this would start to roll over right now, that would be a lot more worrisome. And one of the reasons that I'm puckering a little bit, like I have most of my breadth indicators are full blast and telling me to stay long and strong. The one thing that's starting to worry me is that commodities are pulling back again. And I know we've had a manufacturing decline and blah, blah, blah. But the bigger issue for me is if global demand is going to slow, these large world banks like Citigroup, JP Morgan, they're going to pull in their horns quite a bit, and then that would obviously affect them. So I think the large banks are a place to make sure that that we're focused on and make sure we understand the change. So I want to highlight that. And when we come back from this commercial, we're just going to take a brief break here, but I'll come back and we'll go through some more of them. But now that we've set the stage, we can go through the charts a lot faster. Okay, we're back and we're just scrolling through some of the large banks around the world. And again, we've sorted these based on price performance. But what we see is some of these world banks like HDFC here working out pretty well. And Scooter Ranking's been up in the top quartile here for 3 months now. And the stock has been breaking out above prior highs and keeps running. That's just very bullish, and we want to stay long that kind of behavior. Ameriprise, this one has broken out to new 52-week highs a couple of weeks ago, just giving us a little pullback here. And again, we talked about the momentum rolling over. We want to watch here to see how this gets handled. Again, it can grind sideways, and that's not going to be a big problem. What we want to make sure of is as we get up testing prior highs, if we fail, that's usually an important place on the chart. So we're at the zone of interest and just need to be aware of that. Here's the NASDAQ OMX group breaking out to new 52-week highs today. That's bullish. These all of these financial centers like CBOE, NASDAQ, TMX in Canada, all of these have been rolling up nicely, so they continue to perform. ICICI Bank, this one just keeps running up and to the right. You know, you're hitting new 52-week highs, nothing wrong with that. This Jefferies had a beautiful move and is starting to break through prior resistance here at 21. We can see the PPO is just below zero. And what I want to see now is this starts to move above zero. And with that, again, when you have these asset managers start to break out, I think that's pretty important. PPO, or sorry, the full stochastic moving above 50. Everything about this chart is nice. And look at this Scooter Ranking where it stayed below 50 for almost 2 full years now, and it's starting to change behavior. So to me, that looks like a get on board here and try and ride it. Now, hard to add on when it's already up 8.4% on the week, but any sort of little pullback here, and I think that would give you your opportunity to get long in the space. Here's ICE, the ICE exchange, and what we see is breaking out to new 52-week highs, much like the NASDAQ one. This BlackRock chart is perfectly set up here at resistance. Horizontal line here at 475 looks like it wants to start to turn higher. PPO has made a wave above zero. And again, this is that same sort of setup now that I want to see. I want to make sure that this continues to go higher, you know, in this sort of vein like it did here, and not that it rolls back over. So important inflection point on some of these names. PNC Financial Services, this one's just breaking out to new, let's call it 9-month highs, very close to 12-month highs. Everything about this chart is starting to turn up. The yield is 2%. This is heading a little bit higher. PPO is above zero. Relative strength is starting to break out to new 2019 highs. Has a little bit more to go to get up into this 1-year level, and the Scooter Ranking is still below 75, so a little bit more to go. Here's T. Rowe Price, and one of the things on this particular chart that I want to make sure of is you can see back in the prior periods here that it never does become a top performer for 2 or 3 years here, and then when it did, it actually went on a really nice run. So right in here, finally broke to new 52-week highs, and it took off, and that was a really nice move. And again, lots of asset managers and financials did well in 2017. We're setting up here as we're testing this prior level. If this stock fails right here, this is very common. for this stock not to get much more momentum than this. So it's a critical place on the chart. It either has to really start to outperform, or I'd be more worried about it rolling over, just based on its history over on the left-hand side of the chart. TD Bank, this is a Canadian company, but really big in northeastern U.S. And what we see here is this 60 level, obviously a big hurdle level for the stock going back for 2 years. If it started to break above that base, I would, obviously that's exactly what we want to see. And we need to see this scooter ranking start to pick up a little bit of steam. But again, stock looks all set up to break out to new 52-week highs. Here's Goldman Sachs, and I've been on this chart before. We want to see it start to turn up. Our PPO has done exactly what we expect. Pull back down, gives us a little wave to put our trend line on here, and is starting to turn up. That is exactly what we want to see as it breaks out to new, whatever, 9-month highs or something like that here. That's the kind of thing that we're hoping to watch these stocks do. So the full stochastic bounces off 20, is trying to head back up into this 80 territory. Breaking this downtrend line, we can finesse this line a little bit better now, but we still want to watch and see it get through to new 2019 highs, and in this case it would be roughly 8-month highs since the September breakdown. Everything seems good. As you can see, the scooter ranking got up to new 52-week highs, so it's telling us we're starting to outperform or perform better than we have over the last year, and this downtrend in relative strength starting to break. So an important name like Goldman Sachs starting to push ahead, that would be very important. Here's Franklin Resources, and what we're watching here on this one is, this brief push here in April, May got us to new 52-week highs, and now we're trying to break out again. We bounced off the 40-week. We can see the continuous rise on the momentum here. This dip below, and it looks like it wants to reaccelerate. As long as these follow through, that's exactly the setup we're looking for. And again, if they don't follow through, so all of a sudden this PPO rolls down again, well, that's going to allow us to get out and realize that we've lost momentum, and it's an important inflection point on the chart. MTB here, what we're watching for again is a new 52-week high starting to break out, getting over this 180 level would be a pretty important place on the chart. PPO just starting to turn up. This is textbook where you want to start to enter. This thing is sitting right on the 0 level, and momentum starting to improve. You can see this back in 2016, started to turn up. Now, it spent years going sideways, then kind of got a fire in it. In the stock, and then it's pulled back for this 1.5 years. It's starting to get very close to new 52-week highs, and I think a breakout of that is the kind of thing we're looking to buy. KeyCorp, again, sitting here, this is a pretty important support and resistance level, call it $18, and we want to watch that get through there. Momentum is just getting above 0. Again, if it fails at 0, that's a place to exit. We see this back in here where it gets above and then starts to roll over, and that's telling us to, when these long uptrends break, so 6 or 9 months, when they start to break, that would be a problem. In this case, if they start to accelerate from here, that's very bullish. Invesco. Building a base here, working sideways for the last 3 or 4 months and just trying to tick up above the 10-week moving average. Full stochastic has come down to the 50. A turn up here is obviously very bullish and a nice place to get on board. Okay, another Canadian bank here, RBC, big sponsor in the golf world. What we're looking for is this break above 80, gets us to new 52-week highs, and we're pretty much on that this week. So, new 52-week highs is bullish, not bearish. And as long as the upward momentum continues, that's exactly what we want to see. So I like the entry rate there on RBC. Fifth Third Bancorp, this one's been building a sideways level. Again, you see this over and over on these banks. They're all getting ready to break out to new 52-week highs. And the moment they start to do that, I think you can see lots of money flow towards them for obvious reasons. Huntington Bank shares, this one's got a yield of 4%, trying to get above this 14 level. Over and over and over, we're seeing this setup. PPO just trying to go positive. So I like all of the banks here. And again, if they start to roll over, then that's a bigger picture issue as they all fail. But in general, they look like they're all set up to go higher. And I think that's a swing trade we'd all like to participate in. the asset managers, the broker dealers, the banks, they all seem lined up for me. And when we go look at something like FAS as an example, the 3 times, this usually magnifies the problem. We're not seeing, this is the financial bear, and then FAS is the bull. What we want to watch here is this is, getting right at this level. If it was to start to fail, what are we watching for? That's what we're concerned about. Now, again, you're using a triple here. The only reason I want to show the triple is it gives us a really quick hit as to, even with some deterioration or degradation because it resets at the end of every day. This one is trying to break out to this, new 52-week highs. Anytime you're getting that sort of price action, that's exactly where we want to be focused. So I'd say these triples are lining up to start to make the move, and if they don't, you set your stop just at the breakout level and avoid any pain there. Okay, back into these financials, looking at CME Group. This one's pushing to new highs. US Bank Corp, look at this beautiful 2-year ceiling here. The table is set. If we get above that, I think you want to dine on this one. That looks pretty good. JP Morgan Chase, here we go with a small downtrend, but this 115, 116 level, I don't think there's anything wrong with this bank, and it's starting to turn higher. That's the wave we want to buy right there. That is just setting up like this one here back in 2016. So you get this nice table. We've got a table up here and a breakout to the upside. What's not to like? Bank of America, same thing. Really testing this trend line. Any sort of a break here, and I want to be a buyer. So I love the way all of these banks are all set up. And more importantly is understanding which banks you want to own. The setup is here. They haven't quite hit their triggers yet, but any sudden burst in momentum, and I think that's the place you want to get on board. If they all fail here, again, we're at the tabletop. There's a reason that they keep getting stuck at this level. So we want to make sure they get through. And if they get through, then you can own them. CBOE, global markets, look at this, trying to break through to new 52-week highs, momentum just above zero and starting to turn back up again. That's textbook stuff. Relative strength broke the downtrend. Now we want to see it get above to new 52-week highs, and that would probably attract a lot more interest. So with that, I think you get the idea. But going through all of these bank stocks, they're very well set up. And again, it's an international thing. I think you want to make sure that the banks start to perform here. If they don't, they're telling us that there's bigger trouble out there. But right now, all of the charts are starting to show up the way we want to see it. Working here on the charts, we can see the Dow's now down 200, so that jobs report was a little too strong for the market, struggling a bit to absorb that data. But again, here's a bank, Bank of America, trying to bounce on the news. And I don't think you want to get too smitten either way. We do have a lot of the sectors have wound all the way up to the top side of the cycle, so the PPO is up quite high on some of the faster movers. It's a place to make sure that as earnings come out over the next couple of weeks, that we're in the right position. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 Pacific on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of technical charting informational shows.